the global economy is a perpetual motion machine. And what's happening right now has just never happened in the history of the world, which is you've effectively stopped the machine.
Hello there from lockdown in the Bitcoin capital of the world, Bedford. How are you all? Welcome to the What Bitcoin Did podcast, which is brought to you by Kraken, the best place to buy, sell and trade Bitcoin. I'm your host, Peter McCormack, and today I've got an interview with Jeremy Allaire, the CEO and founder of Circle, the company behind the USDC stablecoin. But before that, I have a message from my show sponsors. So we have 2 shows to go for CoinTracker. Let's give them a boost. Let's give them a big kick before this all ends. As I've said in previous shows, there were some real challenges about having these as a sponsor. People were saying, what are you doing working with a tax company? And I get it. I don't want to pay tax. Do you want to pay tax? Of course you don't. But it comes with consequences. You can face court. You can face jail. So I do pay my taxes. Sadly, I wish I didn't. But I do have to pay my taxes. And so CoinTracker turned out to be a very, very easy way to do this. Very easy to link up your wallets and exchanges. And your taxes are calculated in 2 minutes. The filings work for the US, UK, Canada and Australia. And if you have less than 200 transactions, it is free to use. If you got more than that, well, they have a discount for listeners of this show. Just go to cointracker.io/a/WBD, and CoinTracker is CoinTracker.io. Also, let's talk about sportsbet.io, my newest sponsor, and a massive thanks to them so far. Massive thanks to them supporting the podcast. They could have pulled their advert with coronavirus kicking in and all the sports leagues stopping. They could have said, you know what, Pete? The time isn't right, but they didn't. They wanted to support the show. So a massive thanks to them, and also for raising the profile of Bitcoin globally. They put a Bitcoin logo on a Premier League shirt. Yes, Watford FC in the Premier League every week walk out with a Bitcoin logo on their shirt. Very, very cool. Now listen, if you want to try out Sportsbet, they do have so many different things. They have got some sports betting at the moment, the few sports that are going, which includes Russian ping pong. They've got a range of esports betting, including eFIFA. They've got their Bitcoin casino and my personal favorite, the poker rooms. If you want to find out more, head over to sportsbet.io, which is sportsbet.io. Okay, so onto the show, and this episode with Jeremy came on the back of my interview with Raoul Pal. Now, firstly, can I apologise? Firstly, for the show being out late, and if I sound sick, I am. I'm really, really sick. I've got food poisoning, and I've been in bed all day. But my amazing producer, Danny, worked around the clock to get this show out, so big thanks to Danny. But yes, I am super sick. But I've got an interest in stablecoins. It's one of those weird ones. It's really weird because I can see the use case. I know it was there with Tether for traders early on. It's a really easy way to come in and out of Bitcoin on exchanges. And also, it's an easy way of pushing digital dollars or digital fiat currencies all around the world. But some of these stablecoins are built on platforms which people don't think have long-term viability or are questioning over. So it is a strange one, but I definitely see the use case. So back to why I did this. Well, Jeremy reached out, and it was following my Raoul Pal interview about the global macroeconomy during this coronavirus pandemic. And he said, be prepared as possible. You should be holding physical cash, own scarce assets such as Bitcoin and gold, and be cutting your spend and hustling. So stablecoins are an interesting one because they offer many trade-offs. There is a risk about holding fiat currencies in the bank. They are fractionally reserves, whereas stablecoins promote the fact that they're fully backed, but they come with different trade-offs, platform risk of hacking. So it's a really interesting area to get into. I talk about all of this with Jeremy. I put all the criticisms at him, and he comes back and answers very, very well. So listen, I hope you enjoyed this interview. I would like your feedback on this. It would be good to know what people think of stablecoins. You can reach out to me. It is hello@whatbitcoindid.com. Also, a massive thanks to all the emails and DMs I've received this week. I've got loads, actually. It's been amazing. I said to you during these lockdowns, if you want to reach out to me, I will reply to you, and it's great to hear from you. And I got must be at least 15 in the last week, maybe more. So thank you for all of those. Great to read. I do always reply. So if you do want to reach out to me, you can do on hello@whatbitcoindid.com. If you want any more content, please do check out my other show, Defiance. That is available at defiance.news. You can also check out my 2 films, and I've got another one coming out in the next few days once I get over the sickness. Now listen, I hope you're all okay. Have a great weekend. Stay healthy out there, and I look forward to talking to you next week. Good morning, Jeremy. How are you?
Good morning, Peter. Thanks for having me.
No problem. Nice to finally connect. It's been a long time. I'm surprised we haven't actually spoken yet. It's kind of strange, really, but I'm glad we're finally connecting now. Nice of your team to reach out. So, how are you? Strange times at the moment. I don't even know where you're based, so I don't really know where your lockdown is. But strange times.
Yeah, it is definitely strange times. I'm doing well. My family's doing well, and I'm based in Boston, Massachusetts.
Okay.
So that's where I'm camped out right now.
Right, big fan of Boston. I've been a few times in the last year. Really, really like it. I think it's because it has that British feel to it.
Right, it's New England after all.
Yeah, and also the owners of the Red Sox own my football team, Liverpool.
Oh, is that right?
Yeah, John Henry. All right, well, listen, look, great to connect. You mentioned in an email to me, you said, I've got big things on my mind. So I think a good starting question is, what are these big things on your mind?
Yeah, I mean, I think for anyone right now, obviously, I think people and myself very much included are trying to get, one's head wrapped around the global crisis that we're in and what the implications of that are. I think, concretely within our own communities or our own workplaces, but then obviously very much also at a global macro level. So I'm thinking a lot about that. I think one of the things that I know animated me getting into crypto and this whole innovation, and I think for a lot of other people, was the belief that we needed a new kind of global economic system, a new, if you will, infrastructure for society that could be more resilient, and that's animated the work that we've done. And I think, you see a lot of this commentary that's out there is sort of Bitcoin was made for this moment kind of stuff, but I think more generally, this environment globally is going to decrease trust. It is going to make increased risk, and it's going to do that in a wide array of economic interactions. And it's also going to obviously very deeply challenge the monetary system that we have. It already is. The monetary system we had already was challenged. It's going to be severely challenged in many, many parts of the world. And so this is, from a global macro perspective, this is a really profound moment to conceptualize a better world and to build towards that. And you see these kinds of themes already emerging, not just with the focus on things like crypto, but more generally, like what's going to change in the world. Is this global pandemic going to accelerate our move towards digitization more broadly? Is it going to accelerate the way that learning happens? Is it going to accelerate, lots of different things like that? And I think certainly within my little, tunnel vision focus in the financial system, it should have profound implications. So that's at a very high level some of the things that I'm thinking about right now.
Okay, there's a lot to unpack there. So before we dive into that, I think it would be helpful if you explain to people a bit about who Circle are, but also where Circle is now as a business, because it's changed a lot over the last few years. So Can you just give us an update on that?
Yeah, absolutely. So the kind of quick update, we started Circle about 7 years ago. So we're about 7 years old, and the concept that animated the founding of the company was a belief that digital currency on the public internet, so kind of a public network digital currency models, would make the movement of value, things like payments, a ubiquitous free service on the internet, the same way that data exchange and content are that today. And our focus was not necessarily on, everyone in the world's going to move to a new reserve currency called Bitcoin. It was much more on what we thought of as a hybrid model, where you had these non-sovereign commodity monies and infrastructure that they provided. And you could, in a sense, what we now call tokenize, but you could essentially take dollars or euros or pounds or any other sort of, say, trade or reserve currency, and you could tunnel it over these public blockchain networks. So that was what we were excited about. We were excited about back then ideas like programmable money, the idea that you could write contracts and code that were enforced by machines instead of courts. And so the things that got us into this, that's why we started the company. And the very first set of things that we built were a payment system, a free payment system built on the Bitcoin network that could transfer pounds and dollars and euros instantly in and out of Bitcoin, using Bitcoin as kind of the network or the rails. And that ran into a lot of the limitations that Bitcoin has, or had at least, back in, say, 2016. So it really wasn't well suited to being a scalable, cost-effective public settlement infrastructure. So we made a decision to rebuild the protocols. We think of them as protocols for that kind of digital currency payment model on top of Ethereum, which we can come back to USDC in a little bit because that was sort of what grew out of that. But at a high level, from a business perspective, we started with this free service. We from that stumbled into a very significant trading business, because we had become one of the largest liquidity providers for Bitcoin in the world. And that was a significant business for a couple of years as the market both got more efficient and the exchange environment got more liquidity to it. That kind of large block trading was not as good of a business, so we actually sold that business recently to Kraken. And during the big waves of growth in the digital asset or crypto trading world, we grew very rapidly. We acquired an exchange. We ultimately then sold that exchange, Poloniex, last year. And but I think the sort of thread that's run through all this is, in late 2018, we formed a new consortium called the Center Consortium, which defines a standard for, sort of stablecoins and protocols for stablecoins, and it's a whole framework for it. We launched that with Coinbase, and the first stablecoin on that consortium standard, USDC, grew quite fast. And then mid last year, we basically said, okay, we can see now within the next year or two, using this as a key infrastructure for actual mainstream payments and commerce, like that's finally arriving. That's been what has inspired us for a very long time. And so we started working on and building out a broad suite of services. We call them Circle Platform Services that basically provide the equivalent of like a business bank account for businesses anywhere in the world that is digital currency native, and then platform services. So a broad suite of APIs to build on that kind of digital currency banking infrastructure. And it allows any kind of business to integrate from the existing, what I call electronic money system, into the digital currency native electronic money system, and build apps and program it and integrate it with public chain infrastructure. And that's rolling out right now. And we're very, very excited about it. So we're now, that's where the business is. And USDC is sort of the tip of the spear, or kind of foundation of that. And that's just in the last month grown 60% in USDC in circulation. We're seeing surging growth and adoption in that. And there's a lot of macro related things on that too.
Okay, it's a really interesting area, the stablecoins, for me, because it does challenge some of my own thoughts with regards to blockchains. I'm Bitcoin focused, entirely focused on Bitcoin with my show, and I only own Bitcoin. I just don't take any interest in any form of token. I get some Brave donations every month, which is quite funny because I instantly convert them to Bitcoin. But I don't even know where they come from. I just got an email telling me they come each month. But I'm not really interested in tokens. But I am interested in stablecoins for a number of reasons. But I think they facilitate the buying and selling of Bitcoin easier, and also I think the movement of dollars and native sovereign currencies in a digital form, the moving of that around the world is a very useful thing. And so this is where it challenges me, because it's trying to understand where these could exist on a blockchain. I know Tether ran into some difficulties on Omni. Has that now moved to Ethereum?
Yeah, I think most of the transactions are now on Ethereum.
Yeah. So I'm not a fan of Ethereum. I'm not a fan of all the projects that spun up and all the ICOs, but I can understand why a stablecoin would build on Ethereum. I have questions long term about the viability of Ethereum, but I assume you have some of those yourself. So I think the stablecoin area is a really interesting area to unpack. I'm guessing when you were considering USDC, you had to look at a number of blockchains. Did you have to consider your own one? What was the journey you went through you came to Ethereum?
Well, the way that I look at this is there's sort of some first principles. So one first principle is, first of all, just, for the goal of the application, in this case, a digital dollar, just it technically has to be feasible. It actually has to work. So you need, in the case of USDC, you need a public chain that's secure, that has, the underlying, code execution capability, that has the underlying, object model primitives that allow you to express your protocol or your app. And so, in late 2016, when we started to look at this and then started developing in 2017, really the only public chain that could kind of meet those criteria was Ethereum. So that's just sort of first principle. Does it work? Can you actually build it? I think the second first principle is really around interoperability. And I as a technologist, I've worked in internet software platforms since the early 90s, and sort of have at the kind of browser as operating system, server operating systems, mobile operating systems, web standards, all of these sort of fundamental platforms that society at large has built on. You really want there to be widely adopted standards, and you want there to be interoperability. And each of these sort of public network projects are almost like operating systems. So I look at something like Ethereum as a new operating system layer on the internet. I think we're in the early stages of competition in the development of this new class of operating system. And the internet itself is this decentralized network, this collection of peer-to-peer protocols that allow for a lot of different things. We need to do things like safely transact with each other, or enter into contracts with each other, or reliably record votes for things that happen in the world. All of those things require a new kind of compute and transaction and data layer on the internet. So it's a very important kind of next layer operating system problem. And I think one of the things that was attractive about Ethereum is not only did it work, but I think it was trying to solve that kind of problem. Obviously, as a technologist, I understood the severe limitations of the first generation of that technology. However, you want something that, when we thought about introducing USDC, you want to be able to bootstrap it. You want to be able to bootstrap it in a way where it functions, the interoperability benefits are there. And, with that, having many other developers who are also building on those standards creates interoperability and composability among a lot of different things. And so that's been really powerful. And if you look at the growth and adoption of USDC in particular, and some other projects too, the composability of smart contracts has really enabled some amazing things. You're seeing decentralized finance applications. There's internet-based credit markets that exist now that are there. I mean, there's just really significant breakthroughs that are happening there. So that's sort of the kind of why one would build on that. And I think to your comment earlier, I am not a maximalist on much of anything. I call myself an internet maximalist. So I think there are certain kind of I believe in broadly adopted open technologies, open protocols, open standards, and their wide applicability in a lot of domains. And I believe in that in this area of trustless transactions, trustless money, trustless compute, these kinds of problems that are being solved. So I believe in all of that, but we're still in the early days. So the conceptualization of USDC and Center Consortium, which governs it, is very clear that it will be a multi-chain model because it's sort of like if I'm Spotify, I don't just want Spotify to run on iOS. I want it to run on Android and on a web browser and on Windows, and I'm going to be cross-platform. And because there's going to be a lot of different runtime environments, and if you have a digital dollar or a digital euro, you want it to be cross-platform. You don't want to be tied to one platform. So there's going to be competition in these operating systems. There's going to be multiple platforms, and we want to make sure that that businesses and people and households that use this can use it widely.
Okay, so I'll tell you another reason why these digital dollars are interesting for me at the moment, and then there's a few questions we can unpack. So I did an interview a few days ago with Raoul Pal, the Real Vision guy. And one of the things I said to him is, how do you financially plan? What are the things you would do in a time like this? And he had kind of like a 4-point plan, which was hold cash and also physical cash, not just in your bank, which sparked interest. He said, hold scarce assets like Bitcoin and gold. And the other things were like cut your spend and hustle. And I was thinking about my own personal planning through this crazy period. Obviously, I'm a Bitcoiner, so I hold Bitcoin. I don't have any gold, and I think it might be prudent just to have a little bit. I do have exposure to the pound, but I don't have any exposure to the dollar. Mm-hmm. And the dollar will be one of the strongest currencies through this crisis. If we see currencies fail, and I had to bet on a failure rate, I would put the dollar at last.
Yeah.
So I was part thinking perhaps it might be sensible and prudent to hold some dollars. Now, I'm not going to go down to the bank and exchange some. That's just not going to happen. Mm-hmm. I can't hold dollars in my UK bank account. One of the easiest things for me to do is just to go out and buy a digital dollar. Mm-hmm. Just go, say it was $10,000, $15,000. Yeah. That might be a prudent thing to do. Yeah. I'm assuming I could keep it on a hardware wallet. So it's quite an easy thing to do. So I am definitely interested in that, but that does lead me to some questions for someone like you in terms of that, is wanting to understand really the trade-offs I'm making. Yeah. So one of the good trade-offs I think I'm making, and I think it goes back to Raoul's point about hold cash and physical cash. We all know that our money within our banks is fractionally held.
Exactly.
But with a stable coin, it is essentially fully backed.
Yeah.
Essentially, USDC is fully backed. I know there's been some questions around Tether, whether that is now fully backed, but it is you're essentially saying it's fully backed. We have to trust that. But can you talk to me about that? Is USDC is fully backed, but how do I know I can trust that?
Yeah. So these are great questions, and there's a lot we can unpack there, which I'd love to talk about. So I think I come at this from a couple of different angles. So the first is just that digital dollars like a USDC is just from a user perspective, it is a form of digital cash. So you're right. It is not like commercial bank money. It is like digital cash, meaning it carries the same bearer instrument properties that a Bitcoin would carry. That digital cash token, you can self custody. You can put it on a hardware wallet. You have all those attributes. And it's, like I say, the fundamental utility value of a digital dollar is it is imbued with all these characteristics of the internet. You can transact to any counterparty without counterparty risk, to anyone with an internet connected device in the world. You can settle the transaction with finality in 3 minutes or less for like 2 cents. So that's like super good, super powerful, both the self-sovereign aspects as well as the economic efficiency aspects. And so it's just inherently really powerful from that perspective. Now, the issues and questions that you raise around, how to think about this, both compared to existing forms of electronic money, dollars, and then B, in the specifics, let's just call it the trust architecture of something like USDC, and essentially what is the kind of covenant that you have from the issuer, and why should you trust that, right?
Because the point is, Jeremy, is that I've traveled to the States a lot. Usually it's at least every other month before the travel bans. I've got dollars here. I think I've got about, actually, because the last trip was in Vegas and I won $500 at the airport, I've actually got about $600-700 here.
Yeah.
Now, I trust those dollars.
Yeah, sure.
I know every time I go to the States, I can use them.
Yep.
But the utility right now is terrible for me. I mean, to actually get any use, I have to go to the bank and I have to
sure.
I'm never going to do it.
Sure.
But if I was to hold digital dollars for some kind of rainy day fund, I know I can go and exchange it like that for pounds or Bitcoin.
Yeah, totally. So just to break it down, I mean, I think there are, to the interview that you recently did, I mean, likewise, like I hold cash, I hold digital dollars, USDC, and I hold, basically Bitcoin, and I do also hold some Ethereum tokens, but mostly Bitcoin and cash and digital dollars. That's sort of my total portfolio. And I think from a macro perspective, I think we look at this and what we see is very likely on a global basis, other forms of sovereign money are going to be even more deeply challenged than, say, the US sovereign money form. The amount of government debt effectively that is going to be issued, as well as the cascading, essentially bankruptcies and failures at both the household level and at the level of the firm in many markets are also very likely going to put a lot of pressure on commercial bank money, which is fractionally reserved. And so, if you're in Turkey or Brazil or wherever, and you have a dollar balance in your Bank of Turkey or whatever it is, that's commercial bank money. That's fractionally reserved. That's just a higher risk form of money. And then secondly, you also may have concerns about the sovereign currency, because fundamentally that's a proxy to the creditworthiness of the sovereign bond issuer. And those are going to get worse and worse and worse. And so there is naturally going to be this, quote unquote, flight to dollars. But then the question is, what are good dollars and what are bad dollars? And how do you evaluate a dollar? Because each dollar product is a little bit different. So, dollars in electronic dollars in a commercial bank are subject to that fractional reserve risk, and they don't have the self-sovereign cash-like attributes that you have with something like a digital currency. Now, I'm kind of getting to the essence of your question, which is, when you look at USDC, what's I think very unique and very exciting about it, and also speaks to a lot of its growth, is, first of all, it's governed by this consortium framework, the Center Consortium, which has multiple issuers, and the tokens are sort of fungible and redeemable across issuers. Today, that's Circle and Coinbase. In the near future, there are going to be some other very major companies that are going to be issuers, and so that fungibility will be there. The second, though, is the way it works is, and the USDC issuers are required to be regulated financial institutions, and specifically regulated financial institutions in the United States under either money transmission law or trust bank law. And so we are that. We're regulated in all relevant U.S. states, and under those laws, there are a few things to note. We are examined regularly by banking supervisors, and they're examining a lot of different stuff. But in particular, from a legal perspective, there's what are called permissible investment clauses. And the permissible investment clauses basically say, if you have, as a money transmitter, if you're holding dollars that are in sort of in support of these payment instruments that you're creating, like these USDC tokens, there's a very narrow scope of what those can be held in. And that defines, in turn, what we call the investment policy for center reserves. So the USDC reserves that are governed by the Center Consortium have an investment policy which is bound to either fully liquid, full reserve cash, or the majority is in short-term U.S. government treasuries. And so, first of all, it is full reserve. Second of all, the underlying reserve itself is the most liquid. It essentially is like a proxy to the sovereign credit of the U.S. government, right? And getting to your earlier point, you're sort of saying, okay, who are the creditors in the world that I'm willing to hold a proxy for? And a USDC is essentially that. It is this full reserve against that, and that makes it, in my mind, it gets all of the efficiency and utility advantages of being a digital currency, and it's just safer than a commercial bank dollar. It's safer than the other forms of electronic money dollars, and I'm even concerned about that in the United States. I mean, we're talking about unemployment levels that could be 25 or 30%. We're talking about 30 to 40% of businesses potentially being bankrupt. The household defaults, the corporate defaults. I mean, no matter how you slice it, the balance sheets of commercial banks are not designed to support that. And so, commercial bank dollars may not be. They certainly are. This is why people say hold cash or hard assets. But also, I think digital dollars like USDC avoid that challenge because of the nature of what they are, and so that makes it attractive. And I think we've seen that in the last month. We've seen the surge in USDC in circulation, and it continues every week. And I think that is that underscores it. And so there is, for the crypto in us, this is not a trustless system. You're basically you're trusting the regulatory regime of supervision of firms like ours, mm-hmm. And you're also trusting. And there's public attestations from a top 5 global accounting firm that are published on Center.io every single month that examine the full reserve basis and share that. So that's a piece of the puzzle. But I think you're also basically trusting that short-term liquid U.S. government treasuries will remain liquid, that they will remain instruments of some value, right? But compared to many other sovereign instruments, like you said, that's sort of the top of the pyramid.
Well, yeah, I mean, it's about having a mix to, I guess, hedge your various risks. I mean, even if I was US based, I would be considering the dollars in my bank account versus the dollars under my mattress versus digital dollars. I don't think I would put all my money into USDC itself, because that itself has certain risks. So there's all different risks. Mm-hmm. I mean, one of the other risks. Before I come to that, so these issuers, how many are there?
So today there's 2, and so just the history of this is. We established Center Consortium in late fall 2018, and then last summer it actually kind of went live as a network with the governance scheme, the shared reserve bank model, the multi-issuer model that went live, officially last summer, and so it's sort of bilaterally been managed by Circle and Coinbase. There is an independent director as well. A lot of that's changing very fast. So I think we're very reluctant to just add more issuers. And I think it speaks to the evolution of kind of where we've been and where it's going. I mean, what I call, again, like the bootstrap use case for this was within the crypto trading markets, as you identified earlier, right? It was what I call crypto capital markets. It's market infrastructure. It makes it easier, makes it more reliable. It's liquid. You can get in and out of the fiat system with it. It sort of has all these benefits. But where we see this going is, and this gets to the very first question you asked about, what am I thinking about, is we think, these programmable digital dollars on public chains are going to rapidly emerge as a very reliable payment and settlement medium for a much broader range of payments and commerce applications. Like, we're betting our entire company on that. And Center Consortium, the next major members of that consortium are going to be companies who operate at scale in the existing world of payments and commerce, not crypto exchanges and others. So we're going to be going through this transition from the bootstrap use case, which was sort of the digital asset markets, and into a more mainstream phase, which I think is really exciting.
Yeah. So let's just do another couple of the questions on the trust model, just because this is important for me. So there's a couple of other things I would also be thinking about. One of them, we've talked about platforms. There's obviously a platform risk. If there was a catastrophic failure of Ethereum, or Ethereum was to ever die, what happens to my USDC dollars in a situation such as that?
Yeah, I think, and we certainly thought about those things. The first is the full reserve basis is a really, really important thing, which is if all of the tokens were destroyed, let's just say, like, poof, they were all destroyed, which would be obviously catastrophic. The reserves are still there. Mm-hmm. Like, those exist. And so that's
So I expected that. How do you attach the claim to that dollar?
This gets to the nature of the instrument. The instrument is digital cash like. It is not like it's not like an account at a bank. It is more like I'm holding this digital cash. And so in order to redeem, you need to be able to present the credentials that you possess that token, which is obviously you're able to, from a wallet, sign a message, broadcast it to the chain, and prove the ownership of that, the tokens in that address. And then they move to our address, and then we say, okay, now we have them. Give us your information, your identity, and your bank account, and we'll give you dollars, right? So that's sort of the flow. Now, in a kind of catastrophic thing with Ethereum, you have to assume that you still have the blockchain, the history, right, up to that point where there's that catastrophic event. So you still have, and that's just public key cryptography, right? So you still have the addresses, the proofs, etc. There are things in the Center network, and there are capabilities in the Center network infrastructure of USDC itself. They're essentially to deal with emergencies. So if for example, there was an event occurring which raised alert levels to a 51% attack, let's just use that, we can, through decisions made by the Center governance body, pause USDC. We can just pause it and say, we're going to wait until dust is settled on this 51% attack, or things like that. Now, of course, we've never needed to do that, but the network has been designed with fundamental security breaches of the underlying network in mind, specific potential security breaches that would happen in attacks, say, on the USDC token itself, and then also protocols around attacks on issuers. So there's a whole series of things like that are in place, and those will just need to continue to be hardened. And actually, this is a space that will receive more regulation going forward, as central banks and treasury departments in countries start to better understand how digital currency versions of their central bank money function, they will very likely introduce rules, I think, within the next 2 years that say, if you're a financial intermediary that's issuing these digital currency tokens for our money, there's a whole set of security and operational considerations that have to be, audited and proven.
Yeah. So I fully expect all those things, and it's not like I wouldn't even be comparing this to Bitcoin, because I think the goals of Bitcoin are entirely different.
Yes.
And I think essentially what you're doing here is you're trying to just make a better dollar. You're trying to make a more efficient dollar that's better for the digital age. A few other things in there just to think about. So one of the other trade-offs I would be thinking about is what is the reality of the ability to track the use of this digital dollar. I don't know if you are currently being tracked by someone like Chainalysis. I just had Johnny Levin on. I gave him a very hard time, actually. I don't know your considerations for that, but how much of this can be tracked? Is there a reality that, look, these are digital dollars that offer you some benefits, but one of the trade-offs is that you can be tracked, your certain dollars can be blacklisted, and is that a reality of this situation because of the laws, or is it or do I still have a lot of freedom with it?
Yeah, I mean, it's a great question, and there's a few key pieces here. So the first, coming back to first principles, is the way that we look at these digital dollars and digital currencies like this is that they're designed to be like digital cash. And so that's important. We think it's important to their utility. We think that's important to their value globally, and the architecture of public chains, digital wallets, security, privacy, all those things. It inherits all those things, which are really, really critical. And we think are kind of first principles. I think let's just call like the legal and compliance layer that interacts with this is actually very similar to the legal and compliance layer that interacts with intermediaries involved in Bitcoin. So it's in fact identical. So if you're in the United States, or if you're in the UK or wherever, and you're an exchanger of fiat to Bitcoin, you've got a whole set of KYC AML requirements you need to do. You have a set of reporting requirements. If you as a financial intermediary with a customer who's on your platform, if that customer is generating suspicious behavior, you are obligated to report that to law enforcement. Like that is the set of rules that exist pretty much everywhere, with some exceptions. And so that's sort of the base piece there. I think the USDC, it's an ERC20 token. There may be other chain implementations as well, where the chains have other attributes to them around privacy and security. But right now, USDC is a ERC20 token, and blockchain analytics products support tracing of address movement and things like that for that. And so that exists to the degree that financial institutions or law enforcement are using those tools.
Yeah, I guess there is a slight difference, and this isn't any form of gotcha. It's actually me weighing up the different coins that I want for different purposes in life. And
yeah.
The difference, I guess, with Bitcoin is that I can use it a bit more anonymously if I'm well prepared. Mm-hmm. Or I can use coin joins, mm-hmm. or I can buy Bitcoin in person from somebody and hold it on a wallet and then use it for certain transactions.
Yeah.
I know with USDC, it's going to be I'm going to hold it more like the dollar as an asset right now, rather than as something I'll be spending. But I don't have the option I can't coin join USDC. My assumption is, I think all the money's attached to me.
There's tremendous amount of work in privacy models for Ethereum applications, data, and transactions and tokens. Right? There's an enormous amount. Ethereum supports zero-knowledge proofs. There are a wide range of implementations around that on Ethereum. So there are, I think, in fact, more robust privacy solutions on Ethereum than there are on Bitcoin today. And there are lots of folks building that. I think And what's interesting is that if you look at and think about digital dollars being used in everyday businesses, they don't want to have their transaction flows be auditable by the public. I mean, that's do I want to see? Should I? If someone figures out I'm whatever, Tesco, how much money I'm getting paid or how much money I'm sending out, like that's none of anyone's business. And
yeah,
so,
of course, yeah.
I think there's, for example, there's a project that's from Ernst & Young. I think it's called Nightfall, which is it's a very robust zero knowledge proof based privacy layer for Ethereum transactions that is designed for businesses. Like if you're going to be using this stuff, like I don't want my competitors, I don't want my suppliers, I don't want anyone to know what money is moving around for me. And so as we know, like privacy is fundamental to money at both the household level and at the level of the firm. And so the technologies are really improving on that. I think you still will face everywhere in the world this role of these regulated intermediaries that have these record keeping obligations and have a whole set of obligations. That's not changing, and that's being adapted to digital currency. So the Financial Action Task Force, which is the 170 countries that set standards for anti-money laundering and anti-terrorist financing, have standards now that are in place for digital asset companies, virtual asset service providers, as they're called, or VASPs. And those rules are going into effect this October. And what that will mean is that when you're using an exchange or a custodial wallet, or you're using a service that is moving digital dollars or whatever it is, that you're going to be presented with things like, who are you sending the money to? What's it for? You're going to have that kind of stuff. And that is just going to get rolled out. And the, countries that do not enforce that on firms in their jurisdictions will be at risk of being designated as higher risk jurisdictions under FATF, which means that their people and their firms will have less access to the financial system. So, I mean, that's sort of how the game is played on that. And that is sort of happening.
Next up, I talked to Jeremy more about USDC and the role of stablecoins, but before that, I got a message from my amazing sponsors. So firstly, let's talk about Kraken. They put the power in your hands to buy, sell, and trade Bitcoin. And in these strange times where governments are printing unprecedented amounts of money, many are considering Bitcoin as an insurance, as a hedge against this. So if that is you, if you're considering it, there is no better place to buy, sell, and trade Bitcoin than Kraken. And at Kraken.com, it couldn't be easier to sign up. They also have a beautiful mobile-first app so you can buy Bitcoin on the go. And with their world-class security, they are the most trusted cryptocurrency exchange on the market. They will support you. They've got 24/7, 365 customer support, and they'll help you with any issues, whoever you are, wherever you are. There is no better place to buy Bitcoin. If you want to find out more, head over to Kraken.com or download the app, which is available for the iPhone and Android. Just search for Kraken Pro, which is KrakenPro. And also, let's talk about BlockFi, my longest ever sponsor, the future of Bitcoin and financial services. And if you haven't checked out my recent show with Zach and Flory, the co-founders of BlockFi, do go and check it out. They talk a lot about how they manage risk during this unprecedented market collapse and how they rode through it all. It's a really interesting show, very helpful. So yeah, go and check that out. They've been crushing it. They just raised another $30 million to keep growing the business. They have two really, really cool products on the market right now. They have their interest accounts, which allows you to put your crypto to work and earn monthly interest payments with your Bitcoin. They also have their crypto-backed loans, which allow you to access liquidity without selling. By using your crypto as collateral, you can unlock up to 50% of the value of your assets in USD. If you are interested in finding more, please do your own research and head over to blockfi.com, which is BLOCKFI.com. I guess the last trade-off I would be thinking about is immutability, because with my bank pounds, I think in the UK I'm assured up to at least 80,000, but there is that kind of level of protection. The bank is often checking my payments to... if I make a significant purchase, I'll get a text message asking to confirm it. because they want to, they want to check and see that it is actually me. Say I was buying a TV or something, and also if my card is stolen and somebody uses it, all the money comes back to me.
Reversibility and fraud and all that stuff. Yeah.
But within this world, this is a trade-off I have to accept, is that there is a mutability here. If I make a mistake sending the dollars or they're stolen, they're lost. I can't. There's no reversibility here.
That's right. There's they're digital cash, right? And so there is no reversibility, and transactions are final in minutes. And so with respect to conducting transactions where you have worries about counterparty risk or settlement finality or speed to settlement or those things, it's actually, it's a huge advantage. Now, there's these other places where it's not as much. Now, what I think you're going to see happen is you will very likely see things like USDC, supported within, payments platforms where the payments platform itself provides those things as like a service, in the same way that banks provide, chargeback protection, which is a form of insurance that's built into the fee structure of the transactions on cards. And so, there are ways to price insurance for digital dollar transactions, and there will be intermediaries that say, okay, if you're transacting through our wallets or through our commerce environment or whatever it is, you can have insurance on those transactions. But there's a cost to the insurance. Someone's got to bear the cost of that insurance. That is what all this stuff is within banks. There's costs, and so who's paying the insurance, and and how much profit margin is there on it? But essentially, it is certainly not impossible to have insurance on digital cash.
Yeah, I'm almost certainly going to buy some. And actually, one of the interesting things is one of my lead sponsors is BlockFi, who you probably know. You're a BlockFi currency.
Yeah. Yep.
So one of the interesting things,
I think you can get USDC on Kraken with pounds.
Yeah.
You can get, I think, so that's definitely an exchange with pounds and euros and USDC as well. And you can go straight to Circle, usdc.circle.com/start, and you can connect a UK bank account and transfer funds and just get USDC straight from Circle that way.
Well, the interesting thing there is, because I'm almost certainly going to hold some USDC. Well, let's say I'm going to hold a dollar stablecoin, and I've been thinking about which one to hold. But one of the interesting things is, say, for example, with my bank account, I have an amount of money in there which is a float that I never go below. And let's just say, for the sake of this conversation, it was $30,000. Okay.
Right.
One of the things I'd been thinking about is that I could hold that $30,000 in USDC on BlockFi, and rather than earning the pithy close to zero interest I do on my bank account, I think theirs is like 8.6% on digital dollars. So it can the money can actually work for me better. And I had the conversation with Zach the other day in terms of their business, but my assumption is that in the future, certainly, I can't put a full-time scale on it, but the lending and moving of digital dollars in the environment which BlockFi is going to do will probably end up being a bigger part of their business than Bitcoin.
Yeah, for sure. I mean, I deal with every one of these companies, so all of both the centralized, essentially credit and lending services, and the decentralized ones, they all use USDC. It's as a sort of full reserve fiat collateralized stablecoin. It's got like 99% market share on these platforms, so it's very, very popular. And I think, and we're seeing that grow a lot. I think the really exciting part of this, in my view, is these permissionless, smart contract based credit markets. So Compound, DYDX, but let's just say Compound in particular. It's a credit market that is there's no company. It exists just in code. It's transparent and auditable. You can supply credit to it, and borrowers can borrow at rates that the market sets. You're collateralizing your own borrowing. It has native, kind of collateral call models. So it is a functioning credit market, and there's yields. And Compound Protocol has done a really innovative thing, which is they've created something called CUSDC. And basically, if you think about like a bank, one of the popular bank products is a certificate of deposit, where you sort of say, okay, I'll give you my pounds for 90 days and you'll give me this interest rate, or I'll give you my pounds for 180 days and you'll give me this interest rate. CUSDC is very similar. So basically, you can time lock your USDC, and the market, the decentralized market, there's not a bank sitting there with a bunch of risk guys going, how are we going to price this? The market prices it, and you get a yield. And it's really, really powerful. And so from my perspective, the more that you have these digital dollars in circulation, then people in any market around the world, any country in the world, can say, oh, I have some extra, I'm willing to supply it as I'm going to lend to the market. And I am someone who I'm going to borrow from the market. And you have software that's enforcing those contracts. That's like a breakthrough. That's never been possible. And that's the stuff, that's really exciting stuff. And so and back to your own personal use case of, hey, if you're going to hold this, why not put it to work? The only comment I would make on that, and I have, my own views for my own money with respect to that, is the borrowers on these platforms today, which is where the yield is coming from. The reason the yield is, say, high, is the borrowers are gamblers. They're all crypto traders. So your counterparty, if you're lending to them, which is to say you're putting your USDC with them, is the crypto trading market, and it is gamblers, and it is, there is tail risk there. So there can be black swan events in the crypto trading markets. Now it's over collateralized borrowing, but these are new products, these are new markets, they're new services. And so I think you need to risk adjust your how you think about your allocation in that light.
It's funny, I put those questions to Zach this week. I actually did an interview with him and Floria a couple of days ago, because that's one of the main criticisms that people have had against their business. How do they survive a severe market crash, a black swan event? We've had it. We've been through it.
Yeah.
I don't think we could have been through a more disastrous market, a volatile market and market situation as we have recently, and they've rode through it.
Yeah.
I think they also have very good policies in terms of who they lend to. But the way I see their business is that it starts in the crypto, and then it uses crypto to expand outside of crypto.
Absolutely.
So the people borrowing Bitcoin and Ethereum most certainly are market makers or traders of some kind.
Yeah.
But I'm assuming their USDC or their stablecoins is hopefully going to be taking them out into other markets, into
that's certainly the
markets.
hope. And I mean, just like we're seeing USDC.
I don't think they'll get 8.6% with that, by the way.
No. I mean, the market will price that. And if you look at the DeFi markets, which are the decentralized, like those yields on USDC have come down a lot. So I mean, but I think the important thing is I think these internet-based, effectively like internet-based lending markets, whether they're centralized or decentralized, that utilize stablecoins are growing. They're going to grow bigger, and that's an opportunity for people everywhere.
So, what are the criticisms that you do get that I haven't raised? Are there any like tough criticisms or fair criticisms of these stablecoins? I know a lot of what of the more kind of hardcore Bitcoin maximalists will say that this is the currency we're trying to get away from. We want to get to hyper Bitcoinization, and fine. I'm fully convinced by Bitcoin. I'm not sure how that actually plays out, and if it ever does. But while it doesn't, we still have a need to use fiat currencies. I have a day-to-day need to use them. I cannot survive entirely on Bitcoin. So I'm more than happy to use it, but. I expect one of the other main criticisms is that there is still the ability for companies like Chainalysis to track this, and so they're not, I guess, so much criticisms of you. That's just the reality of the ballpark we're playing in. But is there anything that I've not raised that you think is worth evaluating?
Yeah, I mean, there's a couple things. Maybe one, just a comment on what you said, and then one issue that is a question that we get, and I can share that's a tough question, if you will, and I'll share my response to it. So the first is just, I think that the general kind of criticism of, hey, wait a minute, this is sovereign money. Look at what's happening in the world. Look at the amount of quantitative easing and this giant debt injections and money machine go burr, blah, 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 right? We know that. And so I am with you. Like, I am the bull case, and the long conviction on Bitcoin is greater than ever. And it's why it's such a big part of my portfolio as well. But I think, and I do expect to see more demand grow at an organic level, and potentially more demand grow in an everyday use level over the coming years. But you're absolutely right, and I believe very deeply that vast parts of the world are going to continue to denominate transactions and have the need for dollar-based and potentially a small number of other reserve currencies as mediums of exchange and as unit of account and even as a store of value, with varying degrees of creditworthiness behind those, so to speak. But that will be there, and that correlates to the growing capability of public blockchain infrastructure to support really robust forms of commerce applications, and to actually lower the cost of transacting in the world and make it safer to transact and more automated. So there's a lot of benefits to it, and those are not arguments against Bitcoin. They're sort of these two domains. And I've always had the view that, and I've seen many other credible participants sort of talk about the arc of non-sovereign money becoming a reserve currency that is then stable enough that it can be used safely by everyone. I actually think that in the past I had thought that that's maybe 10 or 20 year kind of arc. Maybe that's going to come in some because of what's happening in the world today. That'll be interesting to watch. But in the meantime, there's this other thing that's happening. And then just to answer the question of is there a hard question? There is one, and you touched on it earlier, but I didn't get a chance to answer, which is this potential for a wallet address to be blacklisted.
I was going to come back to that.
Yeah, so there is a blacklist function on the USDC smart contract. It has never been used. And we are actually imminently going to be publishing the latest board-approved blacklisting policy, so everybody can see exactly what that is. And the policy really focuses on two things. One is, if there were some event that put the security of the network of USDC at risk, then that would be a cause for being able to use a blacklist function. That's one scenario. And I won't get into the details of what that could be for security reasons, but say there was some concern that that could be an example, like I gave earlier as well. And then the second is if there is a binding final court order from a competent court in a U.S. jurisdiction that is a final deemed court order to freeze an address, then the center board would have to make a decision and then choose to blacklist an address. And I'm
assuming that's the same with a bank account as well.
It's very similar, but the bar is a lot higher. These are not accounts. I think it's just the bar is higher on this.
See, the reality of all these questions is just weighing up the trade-offs that come with this. And I mean, I have no need to use the funds for anything.
We're going to also, and when we publish this policy, we're going to be also we will publicly share, sort of when there's been a blacklist, and we'll publicly share what that blacklist address is as well. So this isn't going to be kind of behind the curtain. There's this stuff going on, no one knows about, et cetera. We view this as something that would have to be really severe with not just any jurisdiction, but a competent U.S. court jurisdiction in the U.S. jurisdiction that is enforcing this, and we're not going to kind of go hide. So that we're trying to be clear about how we look at this, the severity, and how the governance framework that we have is going to be handling that.
Okay, as I was saying, all these things are just about trade-offs.
Yeah,
risks and what I'm willing to hold. I know that if I want to hold any physical cash, there is a risk of it losing if my house burns down or my house gets burgled. And if I hold it in the bank, I know I can't use it for illicit purposes, and there is a risk of it being seized by the government in extreme circumstances. And so there are trade-offs with all of this. And I'm not trying to anyway demonize this. It's just balancing the trade-offs. And I think if I was US based, I think I would potentially consider having 10 to 20% maybe of my dollars in something like a digital dollar. I actually just checked. I actually have some USDC. I have 106 of them.
Nice.
That came through as a interesting on BlockFi. But these are the trade-offs, and I'm trying to understand it. An interesting side point, I've also, during the interview that came to my mind, I'm not sure if you're aware, I went out to Venezuela recently. I went out to make a film and see what's going on with Bitcoin there. And I came back with this conclusion that it's not the opportunity people think it is. Now, there is a definite couple of use cases. If you're middle class, upper class, there is a real use case to hold Bitcoin and every week avoid your 10% inflation and just get your bolivars as you need it. That is a definite use case. And there's also a definite use case for remittance for people who just can't get bank accounts. But when visiting the slums and meeting some of the poorest people, there is no use case. There is no culture of saving, and you've got people living on $5 a month. It's completely no use. But people do want dollars. But one of the main problems with the dollars is that if you're living on $5 a month, you're buying things that cost less than $1.
Yeah.
So, but you can't get your change in local currencies. It's all dollar notes. Now, I'm imagining in somewhere like Venezuela, a digital dollar is a lot more useful because it's fast and easy to spend.
Yes.
And also, you actually have multiple decimal places to work with. So actually, it's weird, and I feel like I will get a slap from the Bitcoin gods for saying this, but there is more of a purpose for day-to-day survival and ease of use for a digital US dollar for these poorest people in Venezuela than there is for Bitcoin. Now, I would hope long-term that Bitcoin could grow in Venezuela and it can do all the things, separate money and state, and definance someone like Maduro from all his evil acts. But just practical, real, short-term solution.
Right.
I know if I went to the slum and tried to sell somebody the concept of Bitcoin with its price volatility and transaction costs and a digital dollar, the digital dollar will be an easier sell.
Yeah, no, we see that. At Circle, a big theme for us is dollarization and digital. A lot of things at the macro level that we've talked about, and we absolutely see demand from emerging markets. And, in fact, some of the partnerships that we're working on right now are very much aimed at empowering Latin Americans with self-custodied mobile digital wallets that have seamless, support for USDC. And it's a killer app. It makes so much sense, and I'm excited about it. I think there's going to be a lot that goes on with that.
I've always felt that, and maybe it exists, but there would be a very good use case for a wallet, one that I would certainly use, which holds both Bitcoin, Lightning, Bitcoin, and a digital dollar, and that I could seamlessly move between the three. I've always felt that would be a very useful, especially I was in El Salvador, and I was met with a group of kids who are incentivized to stay out of gangs by doing local work in the community, and they're paid in Bitcoin, and then they can use that Bitcoin in local stores. But the volatility is a slight issue, for them, and also the transaction costs.
Yes.
Really, he's trying to teach these people in terms of savings, but almost certainly in that scenario, if that wallet allowed them to say, I don't know, keep 25% in Bitcoin, but the other 75% in a digital dollar, because they are dollarized in El Salvador anyway.
Right.
That would be a very good use. That would be a very good wallet. But I've yet to see that one.
Yeah, there are quite a few projects that are trying to kind of synthesize those kinds of experiences. Civic has a cool wallet project they're working on. There's a pretty exciting digital wallet from Argent, which is, I think, a UK-based company as well. There are a lot of different takes on this. I think in the next year we'll see a lot of progress on those with the right level of usability, but also maintaining the right level of privacy and security as well.
All right. Well, listen, we've done an hour and 6 minutes, and that was my first section. My first section was just an update on how you're doing in the digital dollars. Let's close out just by talking a little bit now about the situation we're in. It'd be good to just get your perspective on what's happening with the injection of money into the markets, the potential failure rate of businesses. I'll leave it for you to have a broad answer, because there's a lot of people questioning why are loans being issued to companies that are failing, essentially zombie businesses. I especially look at something like the airlines. Obviously it's tragic what they've been through, but even when we come out of lockdowns, my assumption there's still going to be a lot of nervousness about traveling still. Mm-hmm. We know it's through the airports and the planes that this traveled around the world. I certainly, unless I've confirmed I have the antibody, I would be very nervous getting on a plane these days. So these companies potentially won't come back to the level they were before. So I'm myself questioning the loans that are being issued to these businesses. And I'm also just questioning a lot of things personally about what life is going to be like when we come out of it. I almost feel there's a pre-coronavirus world and a post-coronavirus world, and the world will have shifted and won't return. I think Balaji's been saying it. There's going to be a new normal. Yeah,
I mean, I think there's there's a lot to talk about. Obviously, I think maybe the first concept to be grounded in is there's the pre-coronavirus world, there's the during the coronavirus world, and then there's the after coronavirus world. The during the coronavirus world is really the next 2 to 3 years. And so this is not a...
Can I just throw one in there?
Yeah.
So I was trying to map out these different kind of coronavirus epochs, and one of them I had is there's going to be pre and post vaccine as well.
Yeah.
So we've got kind of post lockdown, right. Pre-vaccine,
that's
and
right.
Then post vaccine.
Yeah. And so that's when I say sort of during coronavirus, I think everyone understands we're dealing with explosions of this everywhere in the world right now. And even if you can for 3 or 4 months have mitigation in place, it's not like the virus goes away. And so we are absolutely, until there's a broadly distributed, safe immunization that can be worldwide, which is, Bill Gates had a great interview in the Financial Times yesterday. I'd encourage you to read it. He's one of the sharpest people in the world on this topic. This is a 2+ year journey. So you're going to have, both just waves of uncontrollable infection that are happening in places a lot. But during that period, the world is absolutely not going to be what it was before. And you are going to have, if you want to maintain very, very low levels of infection, you're going to have structural changes in the way society functions. And then just endemically, behaviorally, people will change themselves, because they're going to be well, I don't want to go expose myself to this risk. And the recent studies on what happened in China suggest that the R0 in China was actually closer to 5. And that's really significant. If you have something with an R0 of 5, the intensity of what you need to do to get the infection rate below 1 is pretty severe. And what that suggests is that if you have mildly relax where we are today, you're still going to have very high infection rates, and then you're going to have waves of going back into lockdown. And so that's tricky. And most Western countries we're not living under authoritarian regimes with total observation of society, with the ability to put military police outside of every apartment building, to have, an app that tracks all your status and has code levels that's scanned at every checkpoint in the society. Like, we don't have that. They have that in China. And that it will make it possible for that society and economy to function better. I do not believe that will roll out here. And so you're going to be dealing with those kinds of structural changes. And I think to the macroeconomic question and the bailouts and what this is, I think, the big issue is, the global economy is a perpetual motion machine. And it is this supply and demand perpetual motion machine. And what's happening right now has just never happened in the history of the world, which is you've effectively stopped the machine entirely.
Yeah.
And when you stop it, it's sort of like a nuclear bomb going off, and just waves of decimation that are going to happen. And, it's easy to focus on, say, what's happening in England or what's happening in the United States, but this is every country in the world. There's like a nuclear bomb that went off, and it's just this explosion of destruction of spending and of demand. And you can't just restart that. I think what's happening now is like, you've got a dead patient, and you're trying to inject drugs into them to wake the patient up. The economic interventions are so swift, so significant, and they're just trying to keep the patient alive during this cardiac arrest, during this time. But we will probably come out of it, but the damage is going to be very, very severe. And I believe that you will have very large scale bankruptcy at the household level and at the level of the firm, and there isn't enough money to address that. The only thing that can ultimately address that is productivity, is actual economic output that actually generates productivity. And so you're gonna have this wave of, I think, depression-like circumstances in many, many parts of the world. I think in the United States, I think very, very likely in England and in other places. I think you're going to have these waves of that. And, there'll be this massive scale public health infrastructure investment to kind of be able to kind of try and cope and manage this. And I think, the response will turn to forms of nationalization of public health systems. You already have that in England, but, there'll be forms of nationalization of other industries, and very likely attempts to stimulate productivity and demand through large-scale infrastructure investments that take place. And so maybe a silver lining here is the United States might get high-speed rail, or we might actually see massive investments in green energy production, or very large-scale multi-trillion-dollar investments that is aimed at creating ultimately productivity and efficiency, which is the only way you get out of an economic challenge like that.
Yeah, I've been trying to look at the positives as well. Obviously, this is a terrible situation. The number of people dying, including health workers, and in the UK, public transport workers as well. It has been terrible. But I think we're all recognizing positives in our own lives. I'm not driving my car anymore. I'm cooking every single meal. I think last night, just because I had to work, I ordered my son a pizza, but that was the first time we've had any takeout in nearly 3 weeks. I'm cooking every meal fresh. I'm talking to people more that I don't normally talk to. I'm exercising. There are all these positives, but obviously we have this impending economic problem, which I think we're very early on in understanding how severe it's going to be. Very early on. The trickle effect of this is going to take some time. One thing I hope for, and I'm really hopeful for, is that if we do come out of this in a new world, that we come out of a world which is more local, less global. So perhaps that leads to more localization or localism with politics, localism in terms of trade, in terms of the industries that pop up, in terms of the new things people do. That's one of the things I'm kind of hopeful for, that is something we get out of it, rather than striving to get back to where we are, where everything is global and we have to get on planes here. And I'm kind of hoping that all comes back to that, but I've got a feeling it's going to be really tough times. But that's kind of like my green shoots of hope.
Yeah, I mean, I certainly have a lot of green shoots of hope. I think there will be, I think, real opportunities to reconceptualize how how society is organized, how fundamental microeconomic organizations, what we think of as corporations, are organized, how labor interacts with that, how trade and commerce happens, like all these. I'm looking at this very much from the kind of financial and economic sphere, but even at the political sphere as well. And I am a technologist, and so I think about how these kinds of transformations drive radical technological advancements as well. And I am very, very bullish on the potential for these sort of third generation blockchain infrastructures to be an important set of infrastructure that allows greater levels of self-organization, greater levels of collaboration and coordination without large institutions. And I think that would be, back to your comment about local, like I think lots of us have different kind of political economies in our backgrounds, but one of the models that I studied and was very excited about was this idea of anarcho-syndicalism. And anarcho-syndicalism was sort of expressed as a outgrowth of socialism, but it was designed around the idea of highly decentralized, democratic, self-organized, units of economic organization that sort of have these syndicalist systems that could work internationally as well, but with a very high level of freedom. And I think when I look at projects in the crypto space, like Aragon is a really cool project that is trying to construct a model for how an organization can form and have its governance and have its treasury and have its voting and have its contracts and have all these things implemented on a blockchain and enforced by code and have a human overlay on that as well, of course. But I think that we can see interesting building blocks that emerge that are new forms of organization for how our societies and economy function. And I'd like to see that pursued in the coming years.
I've just written that down. That's going to be my next reading topic now after this interview. Well, listen, Jeremy, I've really, really enjoyed this. This was a great chat. You're welcome to come back on the show whenever you want in the future. I think we could probably go on for a few hours with this one. But I do want to just give you the opportunity to tell people how to follow what you're doing and what Circle are doing. Just if somebody's interested after this, where should they head?
Yeah, sure. Absolutely. I'm on Twitter, Jeremy Allaire, and circle.com is where you find our company. And we've a lot of awesome stuff that's rolling out there for how businesses can use USDC. And if you're a technically minded or a developer, we have like developer sandboxes where you can get in and start using API services that we're launching. And but we're on Twitter and Medium and at circle.com.
Fantastic. Well, look, appreciate your time. Good luck with everything. And hopefully at some point we're going to get back to some normality where perhaps I will be able to get on a plane and maybe I'll get out to Boston and see a Red Sox game, which I've never actually seen. So
I will look forward to that and happy to host you, Peter.
Fantastic. Listen, take care. Stay healthy. Stay safe.
You too. Cheers. Bye-bye.
All right. So what did you think of that? And what do you think of stablecoins? The use case has always been clear, but it gets into this weird world where I can definitely see the role they play, even in complementing Bitcoin, but most are built using platforms which some of the most technical people are concerned about the long-term viability of. I only own Bitcoin, and I do actually every month. Somebody keeps sending me BAT, which I immediately convert into Bitcoin, but I only own Bitcoin, and I do hold a mild interest in stablecoins. I am considering that during a time of crisis, would it be better to de-risk my bank by holding a certain amount of digital fiat currency, probably digital dollars, because I expect during this time of crisis that the dollar is the most stable currency. But what do you think? Is this something you're doing? What do you think of stablecoins? It would be great to hear from you. You can reach out to me. My email address is hello@whatbitcoindid.com. And yeah, as I said, I'm really sick. I've got food poisoning. Like the worst time to get food poisoning when I'm already in lockdown. So I've been in bed all day, but big shout out to my producer, Danny, who's worked around the clock to get this show out. And yeah, if you want to reach out to me, my email address is hello@whatbitcoindid.com. Have a great weekend. Stay healthy, stay safe, and I will see you soon.